Most bank fees aren't random, they're predictable, and you can avoid almost all of them with a few settings. Here's what you need to know. Most common bank fees fall into a few buckets, and they hit hardest when you treat checking like a set-it-and-forget-it account. A monthly maintenance fee is often 10 to 15 unless you meet a rule, and a minimum balance penalty can stack on top, anywhere from $0 to $25. One overdraft or NSF fee, both usually $25 to $35, can erase a whole month of interest. Then there's friction fees, $3 to $5 for out-of-network ATMs, and $25 to $65 for a wire. The real problem isn't one fee, it's how fast small mistakes compound into big dollars. One overdraft can turn into 70 or more once you add multiple transactions, extra fees, or second account getting pulled down. Small debit swipes are the classic trap because several tiny purchases can each trigger a separate overdraft. A small $15 monthly fee is $180 per year. Even an ATM run can be a double hit. Your bank plus the ATM owner pushing a single withdrawal toward $10. And wires feel rare until you pay them a few times. Banks charge these fees for a simple reason. They're built into how accounts are designed and priced. Maintenance rules act like a filter, steering you toward direct deposit or bigger balances, and minimum balance penalties enforce it. Overdraft fees are exception revenue, meaning the bank earns money when your timing is off, and NSF fees monetize you even when the transaction is declined. ATM surcharges pay whoever owns the network, not your bank relationship. Wires cost more because you're paying for speed and urgency, and low deposit rates let banks keep the spread on idle cash. Avoiding fees is mostly about adding guardrails, not becoming perfect with money. Start with a hard $100 buffer in checking so normal timing issues don't turn into overdrafts. Then turn off debit card overdraft coverage if you'd rather have purchases declined than pay $25 to $35 per mistake. Enable low balance alerts so you see the problem before it hits. Use ACH transfers instead of wires when you can, because ACH is usually free and slower by design. Withdraw only in-network to avoid the double ATM fee, and time bills right after payday so your balance doesn't dip mid-cycle. Before you open or keep an account, treat the fee schedule like a checklist because the rules matter more than the marketing. Make sure you can meet the monthly waiver requirements every month, not just in your best month. Read the overdraft policy and opt in only if the convenience is worth the cost. Confirm the ATM network and where surcharges show up. Ask about transfer limits because some savings accounts still cap certain withdrawals. Check deposit holds can delay your money for days, which can trigger other fees. And always read every line of the fee schedule because the expensive stuff is rarely highlighted. A $15 monthly fee is $180 a year, and one overdraft mistake can cost $35 or more. BankingHub can match you to accounts based on how you actually bank and show the real dollar impact for your balance. It's free, takes 2 minutes, and the link is in the description.